Will blockchain replace banks? Blockchain technology has the potential to disrupt certain aspects of the traditional banking industry, but it doesn't necessarily mean that it will completely replace banks. In today's video, we will analyze the relationship between blockchain and banks, exploring various dimensions like financial services, trust, regulation, and scalability. Here are the areas we will cover in this topic. 1. The role of banks. 2. Blockchain's impact on banking services. 3. Trust and security. 4. Regulation and compliance. 5. Scalability and adoption. 6. Collaboration and integration. And 7. The future of financial services. Remember to check out the description area of this video for tools and insights to help accelerate your journey in blockchain technology and cryptocurrencies. 1. The role of banks. Banks serve as intermediaries in the financial system. They provide services like accepting deposits, offering loans, facilitating payments, managing wealth, and more. These services require regulatory compliance, risk management, customer service, and significant infrastructure. Banks have built their systems over decades, earning public trust and regulatory approval. 2. Blockchain's impact on banking services. Blockchain technology, especially when applied to cryptocurrencies like Bitcoin, offers an alternative to traditional banking. It enables peer-to-peer transactions without intermediaries, reducing costs and speeding up processes. Additionally, blockchain can facilitate other banking-like services, such as lending, through decentralized finance DeFi. These decentralized platforms can offer loans, insurance, and other financial products without the need for a traditional bank. 3. Trust and security. Banks are trusted because they operate within regulatory frameworks designed to ensure stability and security. They are insured, audited, and required to comply with laws like anti-money laundering AML and Know Your Customer KYC. Blockchain, on the other hand, relies on cryptographic security and decentralized consensus. While this can provide a high level of security and transparency, it also has risks such as fraud, hacks, or loss of funds due to user error. 4. Regulation and compliance. Banks operate under strict regulations to prevent financial crimes and protect consumers. Blockchain technology, particularly in the realm of cryptocurrencies, is still navigating its regulatory landscape. The decentralized nature of blockchain can make it challenging to enforce regulations, raising concerns about money laundering, tax evasion, and other illegal activities. As a result, governments and regulators worldwide are working on frameworks to regulate blockchain-based financial activities. 5. Scalability and adoption. Traditional banks can process vast numbers of transactions quickly and efficiently, thanks to their centralized systems. Blockchain, especially public blockchains, can face scalability issues, resulting in slower transaction times and higher fees when networks are congested. While efforts are being made to improve blockchain scalability, like Bitcoin's Lightning Network or Ethereum's transition to proof of stake, it is still a challenge compared to centralized systems. 6. Collaboration and integration. Instead of replacing banks, blockchain technology might complement and integrate with traditional banking systems. Many banks are exploring blockchain to improve efficiency, reduce costs, and offer new services. For instance, blockchain can be used for cross-border payments, reducing transaction times and costs. Additionally, banks can use private or permissioned blockchains to improve internal processes and customer experiences. 7. The future of financial services. Blockchain could change how financial services are provided, allowing for more decentralized and open systems. However, traditional banks are likely to adapt by integrating blockchain technology into their operations, ensuring compliance and maintaining customer trust. Rather than a complete replacement, we might see a shift towards hybrid models where traditional banks coexist with decentralized financial platforms. In conclusion, blockchain technology has the potential to significantly impact the banking industry, but replacing banks entirely seems unlikely in the near term. The evolution of blockchain and its role in financial services will depend on regulatory developments, technological advancements, and public acceptance. Banks and blockchain could find common ground through collaboration, leading to more innovative and efficient financial systems.